Hey investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Unity and Unity's growth story. I'm going to talk about its Q4 results. I'm going to talk about how investors should think about the business model as a whole and its ability to make content easily distributable for developers. So we're going to talk about how customers are viewing this platform. We're going to talk about that this is probably not the cheapest stock out there. Investors are probably paying approximately 21 times forward sales. And then we're going to put a spotlight on its path to profitability. So just jumping in here, you can see here. So in the past like 2-3 months, from top to the bottom, including the pop in the share price of approximately 17% on Friday, the stock is down kind of about 40% in the last several months. And for buy and hold investors, this has been a really testing period because everyone wants to be buy and hold as long as the share price is going up. When the share price kind of slows down and starts to come down, a lot of questions start to percolate and people kind of start getting a bit fidgety, and it's, nobody likes the share price going down. Everyone wants to kind of a stock that you can just buy, set and forget. And it's been testing for everybody, and yeah, this is where we're at. So if we actually look aside from the share price, the actual business, the development of the business has been quite strong. So they were expecting to grow Q4. The guidance for Q4 was for approximately 32% year over year. And you can see here in the graph, they actually reported 43% year over year growth rate. So, it's fast. Okay, they're growing fast, and that's the story here. The story here is that we're going to grow at more than 30% compounded for the foreseeable future. And the guidance for 2022 that you can see here in purple, they're pointing to 36%. So they're saying, okay, trust us, we got this, we're going to be growing very, very fast, and you might as well just strap yourselves in because over the long term you're going to get rewarded. Now, the thing is that when you look at this business, right? So I discussed already 2 weeks ago, I believe, I talked about Unity's ambitions to move beyond just gaming. It's a business that makes the bulk of its revenues from gaming, and they don't really give you much granularity into that, but they do give you enough qualitative descriptions to give you insights that they're moving beyond gaming. So they are discussed 2 weeks ago when I talked about the acquisition of Weta Digital and how that gives them exposure to the film industry. And if you listen to the earnings call, during the earnings call, they talk a lot about the fact that they're making several acquisitions to expand their market share, and they talk about how they're going to be aggressive in e-commerce, automotive, and architecture. So this is just to name a few. So this is a management team that has been quite conservative in terms of how they talk about their guidance. So the fact that they're telling you that they're going to be growing at approximately 30% compounded over the foreseeable future, I think you can really take that, you probably can take that to the bank. Now, what Unity does quite well, and this is the reason why the developers really like them, is that you can write code once and then they will distribute that across 20 platforms. So it's write once, deploy many times. And what Unity offers is they have two different segments. One is to help you as a creator to create your idea, and then they allow you to give you the tools to monetize and perform analytics on that content. So what they're trying to do is it's a one-stop shop where they can not only you can come and use the code, but you can then use the technology to perform analytics and see the success of that content and what you need to do to really drive that application forward. So from the customer perspective, they're doing really, really well. You can see here. So customers spending more than 100K per year on Unity are up 33% year over year. So that's really, really strong. Okay, so customers are rapidly flocking towards Unity software platform, and I've made the case in the past that follow the customer growth because that's often more insightful than looking at the quarterly results. If the customer is rapidly moving towards a certain platform or user base or something similar like that, that's going to tell you a lot more about the customer's interest in the platform than you are on the quarterly results. That being said, the net expansion rate for 2021 was up 200 basis points to 140%. So you have strong customer growth and you're able to upsell them more services. So you have a sticky platform, and that's why they have so much visibility, and that's why they're saying we're going to be able to grow steadily at more than 30%. And that's really the bulk of the thesis. The bulk of the bull thesis is contingent on that strong runway that they have. Now, here's the problem, right? So I've been investing in tech long enough to know that you should never talk about the GAAP profitability. You should only focus on non-GAAP. I know that, but I've also been investing in tech long enough to know that many stocks are down 30, 40, 50% in the last several months. Some stocks even down more than that. So I've been long enough to see the two sides of the argument. And there's a large discrepancy. You can see here in the red arrow, the GAAP profitability was negative 48%, and the non-GAAP figure was a negative 4%. So it's such a huge discrepancy. So management saying, okay, don't focus on the GAAP. GAAP is just nonsense. Just focus on the non-GAAP, and the non-GAAP we finished Q4 2020, so last year, at negative 9%. We're moving towards negative 4% this year, and by the end of 2023 we're going to be non-GAAP break even. So those are two sides of the equation that they have. Now I just wanted to kind of put out the figure there to kind of give you some context, right? So if I look at Unity's Q4 gross profits, they had 242 million of gross profits, okay? So 242. But the company's stock-based compensation plus related taxes on the compensation was 116 million. This means that for every dollar of gross profits, for every dollar of gross profits that the company makes, 48 cents of that goes to pay management. So it's not really such a compelling business, right? Because you want to be able to see a strong amount of free cash flow that is not really just going to be paying back management. So it's kind of like, just to give you some context. Now, here's the thing. I know that when it comes to investing, you shouldn't really be too kind of getting down in the weeds and talking about, the number of shares outstanding, but just humor me, okay? Unity's, for 2021, they had 282 million shares outstanding. For the full year 2022, they're guiding for approximately 349 million shares outstanding. So even if they're growing and let's say in the mid 30s, even reach 40% compounded annual growth rates, the number of shares outstanding continue to dilute by approximately 24%. So you as the shareholder are actually not gaining all that much. So that's kind of like the two sides of the equation. Now, Unity right now is priced at approximately 21 times forward sales. So this is an attractive valuation if you think about the business that's going to reach in 2023 break even on a non-GAAP basis, okay? You also have a business that's clearly growing at more than 30%. There's no question about that. What's more, it's only 2% penetrated out of a potential 45 billion total addressable market. And they're making acquisitions all the time to expand the reach of their platform. During the earnings call, the question obviously came up about the profitability, and it says that it's not that we're not going to pay attention to margins and free cash flow. So if you think about what we've done since 2019, between 2019 and 2021, we doubled our revenues, right? That's what we did. During that same period, we improved our non-GAAP operating margins from minus 17% to minus 5%. So significant improvement, and obviously we've made similar progress on a free cash flow basis. So they're saying, okay, we're going to do whatever it takes to invest in growth, and you might as well buckle yourself in. So that's the core of the argument. Now, it's up to shareholders whether they have enough conviction at 21 times sales to see this through. Now, just to summarize, obviously the last 3 months have been really brutal. Many stocks have sold off. We're at the start of the earnings season right now, but so far the evidence has been that the investors have really overreacted to the potential of higher interest rates, and that the company's abilities to rapidly grow their prospects, so far what we've seen, most of the companies have done really, really well. This is a very exciting time to be kind of investing, because as we can see, many companies have seen the share price totally demolished, but at the same time, the companies are doing really, really well and doing terrific things. So difficult not to be excited. There's so many really compelling opportunities right there and right now, and I'm not completely sure that I would personally be paying 21 times this year's revenues for Unity. Um, I think that there are much better investment opportunities available right now. And if you want to find out some of those opportunities, don't forget to check out my marketplace. It's called Deep Value Returns. I help you become a better investor. Come on board, check out the reviews, check out what other people said, get in touch, drop me a line. Good luck throughout the earnings seasons, and I hope to see you soon. Bye bye.